Hello everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem, that is full-fledged problems from income from salary chapter. From the following income of Mr. Anand, okay, we need to calculate the taxable income from his salary. So the basic salary is 40,000 per month. So I'll write 40,000 per month into 12 months, which is 4,80,000. Next, DNS allowance, it is 60% of the basic forming part of salary. So this word is very important, forming part of salary. So it is 60% of the basic salary. Basic salary is 4,80,000. 60% of that is a DNS allowance. So it is 2,88,000. Next commission he has got, that is 18,000. So I'll write that 18,000 here. Next, bonus he has received 60,000. So I'll write here bonus 60,000. Next, employer and employee's contribution to SPF. SPF is Statutory Provident Fund, and I've explained you in the pension chapter that if it only the statutory provident fund is only given for the government employees. So statutory provident fund is only given for government employees. If okay, if the person employee is taken statutory provident fund, then it means that he is a government employee. So we can get to know that he is a government employee. So the statutory provident fund, 15% of the salary is contributed, but there is no tax for the statutory provident fund because he's a government employee, and there is no taxation for statutory provident fund. So there's a deduction is there. Okay, so it will be nil. So even the interest credited to statutory provident fund will be nil. Next, city compensatory allowance, it is 500 per month. So 500 per month into 12 months you have to do, it will be 6,000 rupees. Next, medical allowance. So 800 per month was given. So you need to do it for 12 months. So 800 per month into 12 will be 9,600 rupees. That is a medical allowance. Next, he was provided with rent-free furnished house by the employer, for which employer paid rent of 5,000 per month to the owner of the house. The cost of the furniture is 1,20,000. So we need to find out the, what do you say, the RFA, taxable RFA we need to find out. So salary for the purpose of RSA will be basic salary plus all taxable allowances plus the bonus plus commission plus DNS allowance plus DNS pay plus leave salary. So basic pay is 4,80,000 we have found out. Allowances. So we have city compensatory allowances plus medical allowance. City compensatory allowance is 6,000. Medical allowance is 9,600. Plus we do have bonus 60,000. Plus commission is there 18,000. Plus DNS allowance is there 2,88,000. There is no leave salary. So all these things if you add, you will get 8,61,600. That is the total salary for the purpose of RFA. So first you have to compare 15% of the salary with rent paid. 15% of salary. So 8,61,600 into 15% will be 1,29,240. So the rent paid, they have told that the employer is paying 5,000 per month rent to the owner. So 5,000 per month into 12 months, if you calculate, it will be 60,000. So whichever is lesser, out of these two, 60,000 is lesser. Again, you have exemption. They have purchased the furniture. So 10% of the original cost will be added. So the value of furniture is 1,20,000. So into 10%, only the 10% of that will be added. That is 12,000. So there is no hiring charges and no amount is been deducted from the employee salary. So both will be nil. 60,000 plus 12,000 will be 72,000. So the taxable RFA is 72,000. That I'll write it over here. Next, He is also provided with a car less than 1.6 liter capacity. So when it is one less than 1.6 liter capacity or less than 1600 cc, okay, he need to pay. It is provided by the employer both for personal and official use. So when it is provided, so for the car, they will charge 1800 per month, and they have even given the driver also. When they have given driver, they will even charge 900 per month. So 1800 plus 900 into 12 months will be 32,400. Next, free telephone at his resident by the employer valued at 12,500. Free telephone. If telephone instrument is given, device, if telephone device is given, then it is completely tax free. So telephone device, here he is giving a device, so it is a tax free allowance. It is not a taxable allowance, so it will be nil. See, free telephone at his residence is nil. Next, gift voucher worth 12,500 were issued by the employer. Anyway, gift received will be again taxable. But if you just observe here, 12,500 is the actual amount, whatever it is the employer is giving. So what happens in certain organizations, for any certain occasions or okay, any special occasions also, they will give 12,500 rupees of this thing, the gift voucher. So what happens? Whatever the gifts they have given, okay, they have not told that it is in the cash. If it is in the cash, then completely it will be taxable. But here they are giving the gift voucher. So when there is a voucher, so what happens is till 5,000 it is exempted. Till 5,000 you can give, which is non-monetary. Over and above 5,000 will be taxable. So 12,500 minus 5,000 will give you 7,500. So totally received 12,500. In that 5,000 gift voucher is exempted. So remaining 7,500 will be taxed. So if you add everything, you get the gross salary. So the gross salary is 9,73,500. For that, you will have three kinds of deduction. He's a government employee, remember that. So first is standard deduction 50,000. Second is entertainment allowance. So there is no entertainment allowance for him. So next, professional tax, he has paid 450 per month. Into 12 months, if we calculate, it will be 5,400. The total deduction applicable for him is 55,400. So from 9,73,500, if we deduct 55,400, his taxable salary will be 9,18,100 rupees. So this is the taxable salary office. If you have any doubt, please put your doubts in the comment box so that I'll respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with the next video.